few things you really need to understand about the market. This is how I go about it. All right, this is gold, and then the first thing I want to do is to check out where gold started this month. This is February, and then before the end of February, we saw that there was a massive like a breakout from this structure. Let's mark it out. We had most of the support level around this point, yes, and then we saw that market got to this point, and then there was a breakout. Now there's always this law that I've always practiced. Market will always clear up liquidity either from the sell side or the buy side before a change before there will be a change in trend. And so if you watch here, you see that this market or this price had not cleared anything up here. Let's mark out the zone. We had a zone around there which was serving as a support, and then if you watch, you will see that, let me highlight what I'm saying. You see that this point here, market only sold downward. Let's use a lighter color so that we can be seeing it very clearly. All right, market, you see the place I highlighted, right? Let me zoom it so that maybe it can help us. Good. All right, discover that market came around this point, and then because that not swept liquidity from the buy side, what happened? Market had to turn. There was a reversible candle form here, a market turn, and we had much consolidation because the month was ending. And when the new month started, I believe the new month started on Wednesday, so we're going to mark that zone. I want you to take note of something. Just watch. I want you to take note of something. This was Wednesday. Let's see. This was Wednesday, yes. Now watch. Market came and then came around this point, which is your buy side, came to sweep up liquidity. It didn't come to touch just the support, it swept it off, and then we had consolidation, which is also reversible candle being formed, and then we had a push to the downside. You just get, so before a market will change a trend, market will always have to sweep off liquidity either from the buy side or from the sell side before a change in trend. And that's why we had this massive pull down. This can be also as a result of what's it called, a news impact, but notwithstanding, it boils back to having a proper technical analysis. Most of the news impact we get to see always respect your technical analysis. So in essence, what you should take home should be this: market will always, or price will always take up liquidity either from the buy side or the sell side before a change in trend. And so we had this massive bear move, and then we got here, we had also reversible candles being formed, telling you that this market is leaving this zone now to form a new zone. A new zone. And that was where we had this massive pull. This massive pull was as a result of a news impact, I believe, either NFP or I can't remember, but I know that whatever must have happened here must have been as a result of a high news impact. All right, so we're going to put it as red. Now the next thing you want to do should be this. Now, since you already have something like this, you're starting a new week. The first thing to do is to ask yourself, what has been the major trend? If you watch, the major trend is very obvious. There's actually been a downward trend. Yes, you can pick it from here. If you watch, market has actually been falling down. Yes, you can pick it like this. This is one way to pick it, or you can pick it like this. What I do basically is I change it to line chart so that I will be able to cut off all the noises from the market, and then we can be able to pick it clearly. So remember, so if you watch, this is where, so if you draw it down to this point, you see that it's actually a downward trend. And so market has actually come down to this point. We had this first point here, which is here. We had 1 year and we had 2 years. So it simply means the market will have to touch your demand at least 3 times before any further change in in trend. And so if you watch, the market is actually the market felt very strong, and then we had movement up, consolidation, market fell down. So we can actually still pick out key zones here. This is how you trade. The first thing I do is that I try my possible best to pick out key zones from this place where you had liquidity. Where you had liquidity. Now if you check here, you have a liquidity around here where market, if you watch, market got to this close and then liquidity sweep before market pullback. This was another point that served as a supply, but the liquidity sweep that we had came from this point. So this is also a point to put in mind, that if market is going to change, market should be able to come down to this point also. All right, that's one. And then if you watch from here, after a liquidity sweep was done, market started moving down. So you can actually pick other key zones. We have this around here. Watch, you will see that this served as what? Supply and demand. Watch, market touch your 1, 2, the third one, and we had a break. Right, good. Let me take it calmly so that you can understand. All right, good. Now watch. If you watch, you will discover that market side, you have 1, you have 2, then you had 3, and then we had another break of structure. But what market actually did was to go and sweep up liquidity before the break of structure. Market did not just change to a different zone. It actually had to go and sweep up liquidity, which was around this point. So you can actually still draw this point. You can actually still draw this point to this point like this, and then have it as the supply. You have it as the supply, you have the demand. So if you watch, market got to demand, but to supply, it may have not touched it, but watch, it still respected it to touch it, which was your demand, went back, blah blah. This was your supply, came down here. Are you getting me? So it respected it, swept up liquidity on the buy side, and then push further down, telling you that we are now in a new zone. This is also a new zone. This is a new zone. Forget about the breaks. I want you to see something. This is a new zone. I'm coming. Let's see how we can do this. This is a new zone. Are you getting me? Now I'm going to prove it to you why it's a new zone. Watch. I told you, learn how to mark out important parts. If you watch this, we have 1 around here. And then let me spread it so that it will be obvious. And then we had another one around here. Now this is it's actually funny. Now watch, you had markets move from demand level, and then we had a break, which was more of an extension. And what did market do? So market came down, we had more consolidation, and we had a double top. Market sold down to demand level again, went back here. What did he do? Came back here to touch the supply, and then sold. But if you watch, it didn't just move down. What did he do? He went back to take up liquidity. Watch, we had something here. This is the candle printed before this one. So what did he do? Came back here and took up liquidity. Let's mark it again. Took up liquidity around here. These are a few things I observe in the market. So it took up liquidity from here, and then what happened? It pushed down. Forget about the consolidation around here. It had already taken up liquidity. So the next thing was that market needed to push down. Yes, perfect. This was just an extension. Market needed to push down, and the reason why this was an extension is because this will serve also. Every week rejection serves a major part in trading. You don't just you don't ignore them. It serves a major part. Now I'll show you why it serves a major part. It helps you to create either a supply or a demand. Now in this point, you will see that this is helping us to create a supply. Yeah, supply. If you listen to my previous video, I say supply is what compels the market to sell, demand compels the market to buy. And those say, so you see that this what's it called, this weak rejection around here, and then markets also, this weak rejection around here tells you that this is also something very important. Now we can call them imbalances, or yes, we're calling them imbalances. And then we had market move down to this point, and then we had market, if you watch, market came and touch it again, came down to this point. What did it do? Came back and touch it, brought to this point, came back to where and touch it. And so what should we be expecting? What should we be expecting? What I would be expecting basically would be to balance this. If I see this as 1 and this as yes, this is a weak reaction. We have 2, we have 3. Oh my god, this is a nice setup. What I'll be expecting basically, so we had 1 around there. I'll not count this weak rejection. I'll count this number 2, and we have number 3 here. And then if you watch here, we already had this touching here and this touching here. Okay, I've seen something here. I'm seeing something here. The major sell side, we just have 1 point here, then we have 2nd point here. I believe this market will come down here and take liquidity from the sell side to push up. So I'll be expecting this market to do like this, which is on Tuesday. I believe on Monday will be more like a public holiday, and then I expect market to come down and sweep up this liquidity around there, then push up. I expect market to push up. If it's pushing up, it will push up to this point. This is what I'm expecting market to do. Yes, this is what I'm expecting the market to do. Let's check it from 3 hours time frame or 4 hours time frame. Let's see something. I want you to be very conscious. Now, watch. You will see that we have liquidity around this point or around this point. Let's say around this point we have here. Yeah, good. So if we zoom it very well, you see it. Yeah. We are looking at that. So this is why I believe that this market should be able to come down to this point before going up. So take it back to the 2 hours time frame. Then you see. So this is what I'm expecting for Tuesday or maybe Monday, if there will be a trade before the market will change course to the upside. Thank you.